For the first time in modern history, the supply of money in circulation is shrinking, and it's already starting. Just last night, Silvergate Capital to shut down, liquidate crypto-friendly Silvergate Bank. SVB Financial stock plummets after the lender liquidates their portfolio and cuts their outlook. Credit Suisse to delay their 2022 annual report after a late call from the SEC. And in totally unrelated news, the Credit Suisse regulatory compliance head is leaving the bank as part of a wider overhaul. Surely this has nothing to do with that late night call from the SEC and the sudden decision to delay their annual report. And what's going on, folks? Well, this chart right behind me, this is what's going on. Do you see this little bitty dip in M2 money supply? Just that tiny little contraction in the supply of money, and already we're starting to see some of the weakest financial institutions in the world are crumbling. And folks, this chart is just getting started. We're only in the early innings of this reduction in money supply, and that's something we have not seen in a long time. And the last time we saw a reduction in the money supply, it's not a year you'd care to repeat. See, we live in a fiat debt-based financial system, and fiat debt-based financial systems require, as a feature, not a bug, as a feature of their system, they require an ever-expanding supply of money and an ever-expanding pile of debt. And the very moment you deny that to the system, it begins to crumble. And that's what we're seeing right now with these banks on the brink of failure. Now, before we get into that, I want to talk about the sponsor of today's video, Patriot Gold Group. Now, what you're looking at up here is Exter's Pyramid, and this is a fantastic visual representation of counterparty risk. Now, the higher up this pyramid you go, the higher the risk of default becomes for your counterparty. And if the counterparty to your asset defaults, that asset becomes worthless. And you'll notice at the very bottom of Exter's Pyramid here is gold, because gold has zero counterparty risk. There's nobody who can default and make gold worthless. It's the safest asset you can own. Now, as you look at Exter's Pyramid, consider a couple of things. We're already starting to see those top tiers of the pyramid start to fail, and central banks all over the world are piling into gold. And there's a reason for that. As those upper levels start to fail, people start to stampede down Exter's Pyramid in order to minimize their counterparty risk. That's known as a flight to safety, and that's what we're watching happen in real time right now. And when that happens, the price of gold goes vertical, just like we saw in the 2 years following the global financial crisis. And this is why the ownership of physical precious metals like gold or silver is the best way to protect yourself from financial contagion. And you can also protect your retirement nest egg with a gold or silver-backed IRA from Patriot Gold. Patriot Gold Group is a Consumer Affairs top-rated gold IRA dealer for 6 years in a row, so call 888-988-5401 and get your free investor's guide, or go to nsfgold.com. That's Nobody Special Finance Gold.com. And of course, be sure to tell them nobody sent you. Now check out this chart here that was just published in Bloomberg. What you're looking at here is the annual growth of the M2 money supply. Now, M2 money supply includes all cash in circulation, and then it includes things like savings accounts, checking accounts, and it also includes things like CDs, certificates of deposits. So this chart is showing the annual change in the amount of money in circulation. And you'll notice all the way over there, just this year, 2023, the supply of money is down by almost 2% over the last year. And if you gaze across history, you'll notice even during the GFC, even during the dot-com bubble collapse, the growth in the supply of money, it never went negative. As a matter of fact, this chart only goes back to the 1960s. Look, the supply of money has never gone negative. Not in all of modern history has money supply growth been negative. And here is where the cold, hard reality starts to set in. If you want to see when the last time money supply went negative is, you've got to go back a little bit further. What year was that? You just had to ask, didn't you? That's right, folks. 1929. The Great Depression was the last time we saw negative year-over-year growth in the supply of money. Shout out to Nick over at Reventure Consulting for putting this chart together. And this is a sobering dose of reality, folks. If you look, we have not seen negative growth in the money supply since the Great Depression. And if you want to look to other examples in history, when we had these reductions in money supply, we actually had a few in the years leading up to the Great Depression. First of all, the Great Depression saw 25% unemployment, and at its peak, the money supply shrank by 12%. And as we're going to show in some later charts, we're still in the early innings of this reduction in money supply. Before that, we had the 1921 Depression, which doesn't get as much publicity as the Great Depression, but there we saw a minus 2% growth in the supply of money. And coincidentally, that was about 3 years after the Spanish flu. Does that kind of sound familiar? At the end of World War I, the very tail end of a war, Afghanistan, does that sound a little familiar? Well, in the 1921 Depression, unemployment peaked at 11%. Before that, we've got the Panic of 1893, 18% unemployment with a 3% reduction in the money supply, and the 1870s Depression that saw a 14% spike in unemployment with a 2% reduction in money supply. Folks, if you look at the examples history has provided us for what happens when the supply of money is reduced, these are not periods of history that anyone would care to repeat. And yet this is where we're headed. And as I mentioned before, folks, we are just in the early innings of this decline in the money supply. What we're looking at here, this is the Federal Reserve's balance sheet. This is all of the U.S. Treasuries and all of the mortgage-backed securities that the Federal Reserve has purchased over the years in order to further inflate this asset bubble that's taken 50 years to inflate. And you can see right here next to me, this is the global financial crisis when the Federal Reserve first got in the business of bailing out markets by buying up these troubled securities. And over the years, they just increased the amount of assets they bought. There was a slight reduction in 2018 during the first bout of quantitative tightening. And then, of course, the pandemic hit and the Fed just went on an absolute buying bender. They bought up just about everything under the sun, and the Fed balance sheet ballooned to almost $9 trillion. And you can see, folks, all the way over there in 2022, that little bitty reduction in the chart, that is all of the quantitative tightening that the Fed has done since March. What you're looking at there, that is that 2% reduction in money supply. And you can see, just to get us back to where we were before the pandemic hit, how much more they need to reduce the money supply by. And now you're starting to see how the Fed is painted into a corner here. If they try to undo all of the quantitative easing that they did in the pandemic, they're going to cause a financial collapse. We're already seeing the early innings of that with all of these banks starting to fail. And that's with just a 2% reduction in money supply. Keep in mind, there was almost a 40% increase in the money supply as a result of the pandemic. So keep in mind, as the Federal Reserve continues to quantitative tighten, as they continue to destroy money and reduce the money supply, we're going to see more stories like Silvergate shutting down and liquidating their bank. We're going to see more stories like SVB, where all the assets on their balance sheet are absolutely plummeting in value. At the same time, people are running on deposits, forcing these banks to raise capital any way they can, in this case by diluting the heck out of their shareholders. And of course, we're going to see more shady stories like the head of compliance over at Credit Suisse bailing just after they get a midnight call from the SEC and they have to delay the filing of their annual report. Also, keep in mind, it was just a week ago that Silvergate delayed their filing of their annual report, and then a few days later they announced, whoops, our bank is getting liquidated. I suspect we have not heard the last of this story from over at Credit Suisse yet. And of course, let's not forget this guy right here who we're all familiar with. It is years and years of zero interest rate policy, of easy money, of quantitative easing that allowed people like Sam Bankman-Fried to amass empires as people were looking for anywhere and everywhere to park all of this helicopter money that was seemingly raining down from heaven. Well, now money is getting more scarce. Now the supply of money is shrinking. Now the cost of money, interest rates, is rising. And when that happens, frauds like this get exposed. And I guarantee you, as the supply of money continues to contract, as interest rates continue to rise, we are going to see more cases like Sam Bankman-Fried in the news in the years to come. And considering how long it's been since we've had a contraction in the money supply, how much more the money supply needs to contract, and just how severe some of these historical examples of contractions in the money supply have been, well, folks, let's just say I wouldn't mind being wrong about this one. Once again, thank you to Patriot Gold Group for sponsoring this video, and until next time, live small and dream big.